Good morning, everybody. So it does look like we've got a break on the S&P 500, but when you look at the 8-hour, that is a range bar. So I'll take that break with a pinch of salt. Now we do have some fairly strong structure just ahead of us here. And if you just go to the higher time frames, you'll see what I'm talking about. So there is a daily pin bar here, and then you can see there's a daily inside bar tail as well. And then we do have an area where price came back to find support, and that is at 50-50. So that 50-50 area is extremely important. One thing to bear in mind here on the daily is although the moving averages have rolled over, we are above the 150, so the bigger trend is still intact, even though we've broken through a fairly strong trend line, being that one. As you can see, break, and there was the retest there. But the important thing here is this is daily support that we have closed below. Now, one thing that I think a lot of people are missing is that there is a gap, and that's a daily gap right here at 5008, or should we say 50,000, well, 5,000, not 50,000. So looking at this strong move up, pullback. So where does that pullback come into? Does it come to, let's put this third daily level in. There is a level here at 49.78. So is it coming back to test 5,000, and now are we looking to bounce back up? Or is it the sign of something more? So when we get down to the levels we're interested in, you can see a lot of 8-hour bars that we're just buying off the bottom here. Then we drop below it to try and close the gap. The gap, we'll fine tune the gap now. I don't think we've got it perfect there, but I'll get it on the lower time frames. Sorry, the one thing I did want to point out in the daily was the diversion. So here's your pullback. This is February's pullback. You can see February's low here. March, we've already closed below the open of March, but oscillators to the downside here, oscillators grouped to the upside. So price is higher than what it was in the lows of February, but at the moment we have bullish diversion. So take everything that you see with a large dose of salt. Looking at the 3-hour, we did get the break, but that's a pin bar in my eyes. It is not off a decent level. So you can see, if I do, that's the top of the gap, and let's put the bottom of the gap in as well. So remember, I'm not looking at the tails for a gap, I'm just looking at the body of the candle. And if we come back down to here, you'll see we touched the top of the gap, which is typical, and then buyers came in. Then the next 3-hour bar, we sort of dropped again. I'm not so sure that this is a valid break of the range that we were looking at, and there's the top of the range. So message yesterday was really not looking for anything until we break this to the upside for a long. So I was looking for a break at 50.82 for a move higher. Now what you see on the hour is you do have diversions, and this is also bullish diversion. So price is lower, oscillators are higher. So it's very interesting to see what we're seeing. I think this little up and down going into close, we could see it as a retest, and I think that a lot of people are going to see it as a retest. But just looking at the higher time frames, I'm not so sure about that. So what we may see is a rejection of 50-50, and then a move down to close this gap properly at 5007, possibly even moving down to 49.78. But I don't really want to take that gamble. And the reason is quite simple. We did get moving down, so if you took that rejection of the top of the range, you look at the moving averages, so the moving averages are still below the 150, so the faster moving average is below the 150 here, and then you've got diversions on your oscillators here. So there was a signal here, top of range, inside bar. You could have taken a stab at this fairly decent 100-point stop loss for a fairly large 680 point gain, but risky in my opinion. So I was waiting for a break and retest, not for a short off the top. Now for me today, still more of the same as far as I'm concerned. We're probably going to be ranging again. We do have some data coming out today which may impact this. But for as long as we are above and below the moving averages through the day like this, there is no real trend in play and there's no real trend forming. Now, I definitely don't want to take a stab at a short right now. It's just too risky. This does look like a break, but as I said earlier, looking at the higher time frames, I will discredit this break completely. But stranger things have happened. So if you just look left, you can add that level in there as well. You can see we're already above this 50.38 or 50.39. We could very well reject one of these two levels here. But my view at the moment is we are probably just forming a bit of a channel. So I think what has happened is our sideways range, which was messy to start with lots of buyers coming in here. We've dropped below it, granted, but I don't think that is a valid retest. I think if we'd had solid bars moving down to a level, maybe closing the gap, then coming up and rejecting this area, then I would consider that as a range break. But for me, I think this range has been discredited, and I'm not really keen on taking a short in this area here. So it just smells like a trap to me. I think that's the short and sweet of it. So for me, probably sit on the sides for now. Not really interested in getting caught in any whiplash like we're seeing here. And still stays the same. If we break and retest the high of yesterday, that would trigger the longs for me. But for now, this is a sit on the sides and wait to see what is going to transpire. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.